There's a lot of like digitally native things that you do with Ethereum, whether it's like DeFi exchanges, what have you. Like it's basically the currency of the decentralized financial world, in doing many different things. And you can't do any of that if it's just sitting in an ETF wrapper. So my view is like ETH is 30% of the market cap of Bitcoin. It's probably going to be discounted a little bit for those reasons I just talked about. So my upper range would be these things. If it'd be really good if they get 30% of the flows that Bitcoin ETFs have. But again, like people are acting like we're like saying we're shooting their dog by saying that there's going to be a lot less demand. But like Eric said, when he hinted at, like even if you get 30% of the flows that Bitcoin ETFs got in their first 5 months, that's billions of dollars. Like that's still extremely successful for pretty much any ETF launch you can imagine.
It's been 8 days since senior Bloomberg ETF analyst Eric Balchunas threw the entire Twitter cryptocurrency community into a frenzy with a tweet about some new chatter that the SEC was about to approve spot Ethereum ETFs. Eric's tweet came as a surprise to many because most had given up hope on the consistently anti-crypto agency approving more cryptocurrency-based spot exchange-traded funds. In his tweet, the Bloomberg analyst announced he and his colleague, James Seyffart, were increasing their odds of spot Ether ETF approval from 25% to 75%. Eric said they had been forced to drop to 25% earlier because of the SEC's complete radio silence on the ETF applications. Even prospective issuers like ARK Invest CEO Cathie Wood were beginning to lose hope. While speaking during an interview in March, Cathie noted that the probability of the Ether ETFs getting approved was going down. One of the telltale signs for Bitcoin that something was going to happen with the spot Bitcoin ETF was the fact that we were communicating with the SEC, Cathie said in an interview with Blockworks in late March. That's not happening now. So it was a complete shock when the agency suddenly asked exchanges to update their 19B4 filings just a few days before the May 23rd deadline. With the approvals now out of the way, cryptocurrency investors are speculating about how the launch of spot Ether ETFs will impact the largest altcoin and the broader cryptocurrency market, especially compared to the performance of the spot Bitcoin ETFs. In addition, there have been some speculations about whether the SEC will be willing to approve more spot crypto-based ETFs. Eric and James share their opinions on both topics in a recent interview with Blockworks Macro. As we bring you clips from the Bloomberg analyst's discussion with Blockworks' Mike Ippolito, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
So actually, I'm not as down as I was. I went through a lot of the numbers here. I'm a US guy. I tend to spend most of my time looking at the US market, and Ether futures have 11% of the assets of Bitcoin futures ETFs. And silver has about 10% of the assets of gold ETFs. That's where I was around 10%. Now, when you go to Hong Kong, Ether is 16%. Canada, it's 28. Switzerland, 28, sorry. And Sweden, 37. I don't exactly know why. The ETH futures, they launched at a weird time. Maybe we just sort of ignore that. Or at least if I average them together, I get to like 25%. So I'm moving more up to 15 to 20% of the assets. I can't go above 20 right now, just because in my mind, there'll be a lot of 60-40 investors who are just going to be happy with Bitcoin being their crypto hot sauce. Now, Matthew Siegel was just on a Spaces I was on from Van Eck, and he's like, no, it will be lower, but ETH can be sold as like having intrinsic value. And these advisors love the intrinsic value argument. Yeah, I mean, if they can, that's tough to break through. Advisors have to re-explain this to their clients. The harder and weirder and more complex the explanation, it can be tougher for them to want it. Bitcoin is easy. It's digital gold. It's like done. So Ether, if you can make that explanation of intrinsic value and what the purpose is and why it's better or additional to Bitcoin into a sort of like something a fifth grader can understand, that's like one sentence, like digital gold, boom. I mean, that is what Ether needs, I think, to go above anywhere above 20%. I'm in the 15 to 20% range, but that's still pretty good. That gives you like 8, 10 billion, 12 billion, something like that. That's not bad. And relative to ETH's market cap, that's pretty good. That's a lot of bid orders relative to where you're at now.
Yeah, I mean, it's good to Eric has gotten closer to my view. I'm in the 20 to 25% camp. I think overseas, part of the problem is looking at overseas. Some of those ETFs actually allow staking. These ETFs are not going to allow staking. The other inefficiency here is the cash trade only, so you can't do in kind. So that's going to slightly dampen demand. And then the third thing is, like, when I view Bitcoin ETFs, obviously you lose some things by getting exposure to Bitcoin via an ETF. You're taking this digitally native asset and wrapping it in a TradFi wrapper that just sits there, and you have investment exposure to it. You lose a little bit more with the ETH because, one, like I said, you're not getting staking. And two, there's a lot of like digitally native things that you do with Ethereum, whether it's like DeFi exchanges, what have you. Like it's basically the currency of the decentralized financial world, in doing many different things. And you can't do any of that. It's just sitting in an ETF wrapper. So my view is, like, ETH is 30% of the market cap of Bitcoin. It's probably going to be discounted a little bit for those reasons I just talked about. So my upper range would be these things. If it'd be really good if they get 30% of the flows that Bitcoin ETFs have. But again, like, people are acting like we're like saying we're shooting their dog by saying that there's going to be a lot less demand. But like Eric said, let me hint to that. Like, even if you get 30% of the flows that Bitcoin ETFs got in their first 5 months, that's billions of dollars. Like, that's still extremely successful for pretty much any ETF launch you can imagine.
Eric has maintained a relatively more bearish outlook on the prospects of Ethereum ETFs compared to Bitcoin ETFs. In previous interviews and tweets, he compared Ether ETFs following Bitcoin ETFs to a concert where Sister Hazel, an American alternative rock band, performs after Nirvana, a more famous band that was well liked by critics and sold over 15 million records worldwide. However, his predictions have improved slightly from 10 to 15% of the assets of the Bitcoin ETFs to 15 to 20%. In addition, as James has explained, even that will still run into billions of dollars, which will have an instantaneous impact on ETH prices. During the interview, the analysts also discussed what will follow Ethereum, particularly whether and when the SEC will approve other crypto-based spot ETFs. Eric makes another comparison between crypto ETFs and music, this time comparing crypto ETF gradually going mainstream to how shocking gangster rap albums sounded in the late 80s, and how they gradually just became an everyday thing. In a recent tweet posted on Twitter, Eric wrote, "The ETF-izing of crypto reminds me so much of gangster rap albums in the late 80s. As the music started to get popular, some people flipped out. Walmart wouldn't carry certain albums, representing Vanguard's antagonism. As it happened with gangster rap, someday, crypto-based ETFs will be everywhere." Here are more clips from the interview.
Look, we're probably a relatively long ways out from another ETF. I mean, for a long time, I've been saying it's Bitcoin, then ETH, and then there's a gap between everything else, right? On current precedent, you need a federally regulated market before you're going to allow, like, that the SEC can surveil for them to allow an ETF to list, right? So right now, you need a federally regulated futures market is the base way to do it. There are no other federally regulated digital asset futures. There's not one for Solana. There's not one for Doge, Litecoin, you name it. There are plans out there to try and launch CME. Coinbase is trying to launch some sort of CME, CFTC regulated futures. So right now, and honestly, even after they launch, you need a couple years of them trading and like, you can prove that they're correlated and all these things before the SEC in this admin is going to approve them, and under the current regime. That said, things could change in Congress pretty quickly. Particularly if they come out with a market structure bill over the next year and really define what's a commodity, what's a security. It clears a lot of that mess up. It would be a lot easier to launch futures if they can figure out a way to bring, like, a Coinbase exchange or a Kraken exchange under the exchange rules by the SEC, and then they're federally regulated there. That would speed things up. So basically, you just need some sort of regulated venue of trading these things that the SEC feels comfortable covering before they launch. That said, all of this could change and be accelerated or slowed down depending on what happens in November. That's my overall view. But I think we're probably a relatively long way out from another asset, at least a year, I would guess, probably more. But again, what happens in November, whoever's running the SEC in 2025, that might change.
Yeah, I would agree with that. Let's say the election's over. The SEC may not be as politically vulnerable up until the election, and nothing's getting done before the election anymore, because they could just punt beyond the election now at this point without seeming like negative. But if Trump wins, depends on how much he honors his, decision to be pro crypto and how liberal the SEC commissioner he picked would be. So if he's like, pretty open, it could open the floodgates, to be honest with you. In Europe, they've got all kinds of stuff. So it's possible to have a very wide array of coins in ETPs. They could use ETNs maybe down the road instead of ETFs, perhaps, to get, around some issues. But I remember that his first SEC commissioner was Jay Clayton, and he started the disapprovals or the rejections of the Bitcoin ETF. So Trump's shift, I think, is political. Everything's political. I mean, both sides are. It's all political at this point, but it depends, I guess, how much he gets into crypto for real, and if he wins, and how much he honors that. And that's a huge variable. But if Biden wins, I don't see anything else getting out, maybe for the whole rest of his second term. Because remember, it only matters now because there was an election. If this was a year from now, like ago, I'm telling you, these things get denied. The SAB vote gets rejected. I'm telling you, this is an election year. Election year is this sort of governing force right now. And it wasn't there earlier. And it won't be there in 8 months.
Say the other thing here is they're like Solana, the SEC has no problem in all of these documents saying that Solana is security, right? ETH, they danced around, they refused to say it. They were very arbitrary in the way they looked at it. But Solana, and many others, they have no problem saying these are securities. Ones they don't say are securities that kind of like de facto have commodity status are ones that are forked or based off of Bitcoin many years ago, like Litecoin, even Dogecoin. So the regulatory hurdle for getting those through to an ETF theoretically is shorter. I mean, if a Supreme Court decides that XRP itself is not a security and it's a commodity, that could happen quicker. But the problem is, like I said, no matter what, you need a regulated market that the SEC can surveil for fraud and manipulation before they're going to approve this, before they'll approve anything else. And I just don't see that happening for years.
Eric believes Ethereum needs a catchy one-liner, like Bitcoin's digital gold line, to help issuers easily sell the ETFs to the boomer crowd. The analyst's recent tweet on the topic reads, "One of the challenges for Ether ETFs in penetrating the 60-40 boomer world is distilling its purpose or value into an easy-to-understand soundbite a la, Bitcoin is digital gold. Does a simple one-liner like that exist for Ether? If so, what is it?" Most Ethereum enthusiasts in the comments section commented, "Ethereum is the internet of money," or "Ethereum is digital oil." According to Adam Cochran, Ethereum is like digital oil. It's the gas that makes decentralized protocols run. It's productive and yield-bearing. In other news, Mt. Gox, the Tokyo-based Bitcoin exchange that abruptly ceased operations in 2014, began moving Bitcoin worth billions of dollars earlier today, causing speculation that it is about to begin distributing the coins to its creditors. The news caused a sharp drop in Bitcoin prices from over $70,500 to $68,000. More turbulence is expected if the coins are indeed distributed, but many believe the effects won't be long-lasting. As many members of crypto Twitter have pointed out, the Mt. Gox FUD happens a few times every cycle and never lasts. Do you think it will be any different this time? Please drop your replies as well as your comments on James and Eric's interview in the comments section below. Also, give this video a thumbs up, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.